Hi everybody, RJ Baxter here, Fairway Independent Mortgage with your weekly market update. So first of all, I wanted to share with you that there's been continued strength in the economic data that's coming out, showing that the economy is continuing to chug along. The numbers that are coming out are actually a little bit better than we've seen so far this year in some cases. So that is leading to strength in the stock market and an upward pressure on mortgage rates. We're seeing rates creep up just a little bit, not too bad. They continue at some of the lowest levels that we've seen over the last 12 to 15 months. But regardless, we're seeing a little bit of upward pressure, and it's suggesting that we might see higher rates heading into the summer. But that being said, I wanted to share an interesting statistic with you, and this goes into the Mastermind class that we have coming up next Thursday, where we're going to be talking about strategies to help coach buyers off the fence, because we're hearing it from buyers right now, some buyers that are expressing concern over whether now is a good time to buy, because there's concern out there that the housing market is topped out. I mean, we've had spectacular appreciation over the last 10 years really, or 8 years certainly, across the nation in home values, and people are starting to wonder, is this market topped out? Are we going to see the same type of declining values like we saw back in the Great Recession of 2008? And the thing I wanted to share with you is I was just at a mortgage conference recently in Vegas, and one of the presenters was talking about economic forecasting and some of the statistics that we've seen, and he shared a slide that was very, very eye-opening. He shared that out of the last 5 recessions, and I'm going to pop up the slide here on this video so you can see the actual numbers, but over the course of the last 5 recessions, we've only seen declines in home values in 2 of those 5 recessions dating back to 1980. And that was really eye-opening. In fact, 2 of those recessions experienced a greater than 4% appreciation in home values during those recessions. Crazy, but the thing is that during the Great Recession, we had declines on average of 14%, which is a huge decline. And this is a generational type recession, so it's what I'm trying to get at is that is fresh in people's minds, that this last recession had such a huge decline in home values, but it's statistically highly unlikely to happen again when the next recession happens, because it's not a matter of if the next recession will happen, it's a matter of when. So this is something really really eye-opening to share with your buyers that are concerned that home values are going to go down a lot. In 3 of the last 5 recessions dating back to 1980, for the last 40 years, home values have actually increased. And I'm not saying that necessarily that's going to happen at the next recession, but the fact of the matter is there's still much more demand for housing than there is supply nationwide, especially in the front range market that a lot of you that are watching this video are in. There's so much demand and so little supply that is what the supply and demand thing is what's driving values up. Is that going to change in the recession that's coming, whenever it is? Who knows? But this statistic was really eye-opening and something that you can share with your buyers that are hesitant as to whether or not it's the right time to buy. So I hope that helps you guys out. You guys have a great rest of your day. Appreciate you watching. If you have any questions or any loan-related questions, just give me a call. That's where I come in, and thanks for watching.